The broadcast is now starting. All attendees are in listen-only mode.
Good evening, friends, and welcome once again on this special webinar on presumptive taxation. In this tax season, income tax season, all are very busy in filing the client tax return. And in this, there are so many queries also. And presumptive taxation is one of the my favorite topic as well. And would like to tell that we have requested Sir Manish Dafria, sir, can you please take this session? And sir is immediately agreed despite of this busy season, and despite sir is traveling. Sir is traveling tomorrow and Thursday as well, so we requested sir early is better. So we have requested sir, and sir has agreed that sir is taking the session on Tuesday in this busy session as well. So we are very thankful to you, sir, for this acceptance, and it will immensely benefit our participant as well, sir, across the India. So friends, before I introduce sir and before I invite sir, I would like to tell that on Connect Easy we'll always try for different topics, and we'll try to cover as much as profession we can cover and try to provide new things to the participants. Friends, we have created our the entire store as well. Let me share my screen first, and then you can share. You can check the. So friends, this is our store where we have now given the books also on very discounted rate across the India, and we will deliver at your doorstep with the discounted rate, no shipping extra, and you can check that as well. We have a MSME, and apart from this, what we have listed these books, we would like to tell that any other book also of Taxman we can provide that as well. So you can come across anything like any other books apart from which is not listed here. You can just message us and we can provide that book also on your doorstep. We'll try for the maximum discount what we can offer to you. And here also you can see that we have already given many books, and our webinar is also listed on different topics. We have a session on a webinar on project finance, on valuation. We have recently concluded on ITR filing, and these three different books from one of the renowned firm of chartered accounts, they have written, their partners written. Their story is also very inspirational. They have started with 2 partners and then now a 500 team. So they have written books which is very inspirational and very knowledgeable. In the past, we have concluded many sessions on FEMA and on forensic. That all are listed here on different topics, and future topics will be also listed here. So you can visit this. The entire details is here, and just want to show this that you can also visit and check that if it is of interest, it's beneficial to you, you can purchase from here. So with this small thing, now I would like to invite sir and introduce sir. Sir, you can share the screen now. So our connectivity journey is also we can say inspirational kind of thing. More than 500 panelists, speaker, co-speaker, chief guest, parliamentarian, central council member of across institute, renowned tax expert like Manish Dafria sir has also addressed our platform, and this is sir has taken session on very initial stage of our Connect Easy as well on section 195, which is also a very memorable at that time. We still remember. I met Manish sir first time in, I think, in 2009 at Guwahati ICI, where sir has came to address the Students National Conference, and I was also one of the speaker there, along with my wife, on motivation speaker to for the students. So at that time we met and we known to each other till that from that time. So sir, as a profile, say sir told us it's basically a professional balance sheet of CA Manish Dafria, sir. So, sir is a chartered accountant and academician. Sir, fixed asset in Manish balance sheet consists of 5 education qualification. BCom in 1989 from Indore, and sir was a merit holder in University, entire university. MCom in 1991 from DAVB Indore, CA in 1993, MA in Economics 1995, DAVB Indore. Sir has done DISA in 2002, 8th position at that time in All India, which is very inspirational, sir. And also, sir, if segment reporting is applied to Manish, he will be reporting his statement under 3 segments. Like professional, what is a professional? Sir is a managing partner as Mrs. VK Dafria and Company, chartered accountant from Indore. As an academic, visiting faculty at IIM Indore, and I also engage with IIM community on subjects like strategic management of taxes, management accounting and control and GST, impact on supply chain. Visiting faculty, Indian Institute of Corporate Affairs, New Delhi, faculty at Direct Tax Regional Training Center, Bhopal of Income Tax Department, conducting workshop for commissioners, joint commissioner, deputy commissioner, assistant commissioner, and ITO as well on various topics of taxation laws. Sir is also faculty at our Institute of Chartered Accountants of India, post-qualifying courses for members on Information System Audit, DISA since 2002. Teaching CA in a post-qualification courses has generated an experience reserve in Manish balance sheet, which is credited with around 3,500 hours. Teaching experience to CAs in various parts of the country, from Guwahati to Bhavnagar and Ludhiana to Rajkot. Sir, one of your students gave regards before the session, Mayurji from Ahmedabad. So he told that give my special regard to sir, and madam also, his wife. I would like to continue. Sir is the author of many articles on taxation and other professional issues on ICI General, the Corporate Accountant Today Taxman publication, Forum Views magazine of BSP Broker Forum, Dainik Bhaskar newspaper, Tax Guru online portal. So, sir, his 2 articles on international taxation as well in respect of TDS under section 195 on fees for technical service, till date generated more than 1,75,000 views on Tax Guru portal. Sir, the special reserve, sir, in sir's balance sheet consists of, sir is a co-opted member at Direct Tax Committee ICI for the year 14-15, nominated by CBDT as a member of Regional Direct Tax Advisory Committee Indore charge for 2 years from 11 to 13, contributed in revising ICI guidance note for Chartered Accountant on Audit 44 AB, invited by Income Tax Department to deliver lecture for their in-house study circle and public awareness program, invited by MP State Tax Department to deliver lecture on services in GST for their in-house study circle program. Sir, also invited by MP Police Department to take lecture on forensic accounting for their in-house training program. Visiting central government RCVP, Nora Academy Administration Bhopal, deliver lecture for officer of central services. Sir had presented papers in various national and regional conferences organized by the Institute of Chartered Accountants of India on various topics related with taxation like transfer pricing, wills and succession, corporate merger amalgamation, SEZ, LLP, DTC, TDS, wealth tax, fringe benefit tax, and multiple. Sir has delivered budget speech in various cities of countries. Executive Committee member of Indore Management Association, contributed in organizing International Management Conclave and nationally acclaimed Twin Track Quiz Competition, India Brand Guru Quiz. There has also represented Indore University in state level youth festival in quiz and debate competition. Sir is also a core group member along with me at Bombay Chartered Accountant Society as well. Sir is in membership committee, I guess, and I am in HRD committee. Sir is a professional partner, what I already told, and sir is very well and easily, we can say, available, and we can approach sir anytime. So, despite of so many achievements, sir is still very humble and down to earth personality. So, we are very thankful to you, sir, and would like to request you to take the proceeding ahead for our today's session. Over to you, sir.
Thank you, Virag. That's rather a very long kind of introduction. What I feel personally is when we are gathered for discussion on a professional topic, then probably all these things may not matter that much. What is important is the say discussion which we have to do on that particular topic, for which all of our say members have also joined this particular program. So I think without wasting any further time, let's start right away with the topic of the day: presumptive taxation, interplay of section 44AA to section 44AE. Okay, various issues arising out of that presumptive taxation is what we will be discussing in this particular webinar. In fact, when we talk about this presumptive taxation, we are basically talking about three sections: 44AD, ADA, and 44AE. Out of these three also, probably 44AD is most widely used kind of provision, then 44ADA, and in very limited number of cases, we have this use of section 44AE. We all must be knowing there are in fact certain other presumptive taxation provisions also applicable specifically for NRIs, for non-residents at large, engaged in shipping business, engaged in airline business, but for the time we are not concerned with those provisions. We will be restricting ourselves to an understanding and analysis of these three, mainly 44AD, ADA, along with this section 44AE. Okay. So, in fact, this whole presumptive taxation is a very old concept in tax laws. Seniors, if they are there in this audience, they must be able to recall 20-25 years back also they used to have various, they income tax department has toyed with various concepts related with the presumptive taxation, sometime for small professions, vocations, and then all different segments of the business society. But then over the period of time, these sections 44AD, 44AD, and AE, they have got more or less stabilized in the tax laws. Okay. So the whole idea is this: it's presumptive taxation is a kind of safe harbor rule, like we have in transfer pricing. This whole concept of safe harbor rule: you declare your income up to a certain level, and we won't ask you any question. You would be required to maintain detailed account, detailed documentation. This happens quite a lot in transfer pricing, where documentation is a very big issue. But then they say, okay, you entered into this particular type of transaction, declared your income at a particular predetermined rate. So nothing further, no arm's length pricing, no further question would be asked. So similar kind of concept they have introduced for small time businessmen and professionals by way of this whole presumptive taxation. Okay. The whole idea is this: to provide an simplified and unambiguous manner of determination of taxable business income to small businessmen, because we all understand otherwise, the exact quantification of taxable income in the case of business profession is not easy. Like my other heads of income, for example, salary. Now, what exactly is taxable under that salary can be defined with a very high degree of preciseness. With respect to business income, that level of preciseness is not there. Lot many estimations, ifs and buts, allowance, disallowance, everything goes into finding out the taxable component of my whole business income. So in that particular background, they have introduced this whole concept of presumptive taxation. Idea is to provide a simplified mechanism. But as we all know, in taxation, there is nothing which is actually quite simple. Even if something starts with a simplified kind of thought process, over the period of time, they introduce so many amendments, changes, clarification into it. That's something which has been created for creating simplification. It starts creating its own set of problems, and same is happening with respect to this presumptive taxation also. Okay, lot many complications, lot many issues which keep on cropping up with respect to the applicability, with respect to interrelationship with other sections. So in today's webinar, we will try to go through all these issues which are relevant with respect to our understanding of presumptive taxation. Okay, I'll try to keep this whole discussion more of an issue-based discussion rather than simply giving a theoretical gyan on this. We will try to address more and more issues. Those participants who are connected with us through this go-to webinar, they can always raise their queries through this question chat box, and I would like to answer to all those questions to the best of my abilities. Virag, the whole team of this Connect Easy has provided a wonderful opportunity to all of us for this whole interaction. And then I must admire the untiring efforts put in by this whole team of Connect Easy of delivering knowledge on such a variety of subjects to the profession of all over the country. They really deserve a heartfelt appreciation from each one of us, Virag Shah and the whole team of this Connect Easy. Okay, now let's start with our understanding about this whole presumptive taxation. First of all, the basic applicability part of it. I'm sure we all are familiar with this, but still it would be good to have certain detailed understanding of this applicability part itself. These are three different sections: 44 AD, 44 ADA, and 44 AE. As I have said, most commonly used is 44 AD, ADA little lesser kind of frequency of use, and 44 AE used in very specific kind of cases. And all these three sections have a different flavor of themselves. Okay, so far as the very first part of applicability itself, each section operate in a different sphere, in a different manner. For example, this whole section 44 AD. Now what they say, 44 AD actually applies for an eligible assessee carrying on eligible business. These two terms are very important. Going forward, we are going to generate a lot many issues based on these two concepts only. Assessee should be an eligible assessee, and he or she should be carrying on an eligible business. Now, how do they define the eligible business? They say any business. So any business, not defining any particular type of business, but what they say, any business except one which is covered under section 44 AE, that transport business, that is not covered. Apart from that, any other business is eligible for 44 AD. But a very important point we need to keep in mind, and this is a point where I get lots and lots of queries, that it should be at least a business. Any activity which cannot be treated as business, that is outrightly out from the purview of section 44 AD. So it should be business. We will try to see some issues related with business vis-a-vis profession. So the first requirement of 44 AD, it should be any business. Turnover is up to 2 crores of rupees. We all know it. Then the assessee should be an eligible assessee. Eligible assessee carrying on eligible business. So who all are eligible assessees? Individual HUF partnership firms other than limited liability partnership carry on, and they are resident in India, not claiming all these deductions, 10A, 10AA, that SEZ deduction, etc. Chapter 6A Part C deduction, all those income based deductions under this Chapter 6A Part C, all those deductions one should not be claiming. So this is eligible business and eligible assessee simply. But a very interesting aspect of the section 44 AD, and in number of cases which is lost sight by the professionals, we are going to have a very detailed discussion on this very important aspect. That is the subsection 6 of 44 AD, a kind of negative list. And they say that the section shall not be applicable to a person A who is carrying on a profession. On that assessee, on that person, 44AD will not apply. Any person having income in the nature of commission or brokerage, or any person carrying on any agency business. These three cases are out of the purview of 44AD. 44AD would not be applicable in these three cases. I would request my audience to pay specific attention to the word person sitting pretty in that subsection 6. Section shall not apply to a person. If any of these three situations are there, that person, that assessee that assessee will not be entitled for the benefits of this whole section 44AD. The problem is this, and we will discuss it again in quite detail later on. The problem is this: we all tended to apply 44AD with respect to a particular business. We try to understand 44AD with respect to a particular business. But the subsection 6, the disqualification list, the negative list, that applies with respect to a person. So it's a very, very significant, subtle, but a very significant difference between a person and a business. The provisions apply with respect to a business, but the disqualification list operates with respect to the assessee as a whole. So this is the first part, 44AD, eligible business. Assessee should be an eligible assessee, should be carrying on an eligible business, and the assessee should not get hit by any of this disqualification covered under subsection 6. Then 44AD applies. As against this, now 44ADA, it applies to an assessee engaged in profession. There is no concept of eligible assessee with respect to 44ADA. It simply says any assessee engaged in carrying on any profession referred to in section 44AA1. Now, this is another very important aspect, whereas 44AD applies to all types of businesses because they are using the word any business. 44ADA applies only to the profession, that too only limited type of profession. It does not apply to all types of professions. It applies to only limited type of professions. Okay. Assessee should be an individual or partnership firm other than LLP. Earlier, they have applied this 44ADA even for HUF also. Later on, it has been pointed out that an HUF cannot carry on any profession. So now the section is saying that 44ADA assessee is an individual or a partnership firm resident in India other than an LLP. And then the professions applicable only on the specified type of profession. And they've given us a list of these specified professions: legal, medical, engineering, architectural profession, profession of accountancy, information technology, film artists, company secretaries, etc. These all are specified professions. Anybody engaged in any profession other than these specified professions, 44AD will not apply. Okay. We are already getting certain questions in the chat box. I propose to address them after just a little bit of say introductory discussion about this whole applicability part. So this is 44AD, then 44ADA. Then the third section is this section 44AE. It applies to an assessee who here the criteria is the applicability criteria for 44AE is not a monetary criteria. What is the limit of my gross receipt, my turnover? That monetary limit is not there, but the criteria is the ownership, the size of my ownership. It applies to a person carrying on this goods in the business of say flying, hiring, leasing goods carriage vehicle, not the owner of more than 10 goods carriage vehicle at any time during the previous year. A very important aspect of this 44AE, if we are able to see a little bit carefully, 44AD and 44ADA both talks about assessee being individual or partnership firm other than LLP. AD applies to HUF also. ADA is only for individual partnership firm. 44AE, they are not mentioning the type of assessee. So strictly speaking, 44AE applies even for the company also. Okay, there is no mention of the category of assessees in 44AE. So even companies are also covered for the purpose of the section 44AE. Okay. So this is the very first introductory idea, when the these sections would be applicable, when they will not be applicable. And we are going to have some more discussion on this applicability part itself, because in fact, whatever is the problem, the main source of problem with respect to these sections is the applicability part. Once it is applicable, then what is to be done? That is quite simple. So we will be having some more discussion on this whole applicability part also. Now, once these sections are applicable, then the calculation part of it, how much would be the taxable income? We all know it, 44AD, 8% or 6% of my turnover, my gross receipt. Okay, that will be my taxable income. By turnover by way of check or turnover in cash, that whole criteria is there. So 8% or 6% of my turnover, that is 44AD. ADA straight away 50% of my gross receipt, a huge difference from 8%, 6% to the 50%. Okay, but this is what it is. 44ADA, 50% of my gross receipt, that is my taxable income from profession. And 44AE, that is on per vehicle basis. Okay, we all know that per vehicle basis, in case of heavy goods carriage vehicle, based on the tonnage capacity. In case of non-heavy goods carriage vehicle, 7,500 rupees per month basis. This is what is the say criteria amount at quantification of taxable income, or a sum higher than the aforesaid sum claim to have been earned by the assessee. Assessee can always claim to have earned a higher income, and that higher income would be taxable. Otherwise, whatever are these minimum prescribed amount, they will be taxable. The income determination part, we all are familiar with this. Okay. Then one more aspect of this, the basic applicability part, applicability of other provisions. Okay. Any other deduction allowable under section 30 to 38 shall be treated as if full effect has been given, and no further deduction in respect of those sections shall be allowed. So whatever are these income, they are final sort of income. No further deduction would be available for the purpose of calculating WDV of an asset, because you are not actually claiming a depreciation, you are not being actually allowed a depreciation, but still WDV would be calculated as if the total depreciation has been claimed, and that total depreciation has also been allowed. Later on, when the assessee would be selling off any of these capital assets, then for the purpose of applicability of section 50, a short-term capital gain or short-term capital loss, this provision would be relevant. WDV would be calculated as if the total depreciation has been claimed and allowed to the assessee. Okay. So this is what is this basic applicability part of these sections, when these three sections would be applicable. And once they will be applicable, what will happen? How the income would be determined, and then how other provisions of the act would operate once my assessee is covered in any of these three presumptive taxation provisions. Okay. So after having just this brief kind of introductory idea, now we straight away go to the issues which are arising from all these three provisions, mainly with respect to 44AD and ADA. Number of issues, number of problems. I keep on getting phone calls and queries and mails and asking about generating various issues with respect to this 44AD ADA. So I have selected some of those issues for the benefit of all the audience today, and then all those issues we will be discussing now in a threadbare manner in the remaining part of our webinar. Before this, let me take certain questions also. We have got certain questions. Okay. So Rohan Gupta ji is asking a question: can 44AD be applied in case of F&O transactions? I must mention, whatever number of seminars I have taken with respect to this whole presumptive taxation, this is but one question which is always there in every discussion, every seminar. So Rohan, I would be answering this particular question in the say later part of our discussion. Okay, non-CA practitioner. Another question from Mr. Alpesh Shah. Non-CA practitioner providing income tax, GST and accountancy services, whether it's a business or profession, 44AD or 44ADA applies. This is another very interesting aspect of this ADU versus ADA, when AD would be applicable, when ADA would be applicable. So we will answer to that particular question also. Okay, 44AD, whether turnover include or exclude GST. Piyush Chande. Okay, again Piyush, we will be covering that particular question also. And then CA Atul Gundewar, in case of professional, if it decides to use section 44 ADA, can he claim loss from FNO transaction also? And if yes, how? Okay, fine. So these four questions, I think all these questions would get answered during the course of our discussion on various issues. After my discussion is over, then probably again, if anything remains, we can take these questions at that point of time. Okay. Fine. So let's come to various issues arising out of this whole presumptive taxation. And as I mentioned, the whole problem starts with the very first point itself, applicability. When the section is applicable, when these sections are not applicable for me, and more importantly, with respect to 44AD, whether my assessee is eligible at all for 44AD or not, the applicability part. Okay, so let's try to understand certain situations. Okay, so these are two questions I can put forward for the audience to answer. Those who are connected with us on this go-to webinar, at least they can probably send me certain answers. Whether an assessee engaged in business and also in profession specified under section 44AA1. So there is this assessee who is on one side carrying on a business, and another side he is carrying on a specified profession also. Whether he can opt for section 44AD for his business. And then a reverse situation with respect to business, whether he can opt for 44AD, and whether the same assessee can opt for 44ADA with respect to the profession. Okay. So we've got one answer from Nikhil Bansalji saying yes. I'm not sure whether it is yes to both or yes to one or yes to two. Okay, the question is very simple. We are trying to understand the applicability. When 44AD, ADA would be applicable, would not be applicable. So this is a case where assessee is carrying on a business as well as a specified profession, specified under section 44AA, for which 44AD applies. So whether for business he can go for 44AD, and for profession he can go for 44ADA, or none of these sections would be applicable, or one would be applicable, another would not be applicable. Okay, so we have got C. Anand Raoji saying for second question yes, Nikhil Bansalji saying yes for both, Piyush Chandeji no for 44AD. Okay. So let's analyze this particular situation. The point is this: when I'm carrying on a business as well as a profession, and that profession is mentioned in the section 44AA, whether for my business I can go for 44AD. Okay, as I think I have mentioned earlier, normally we try to think 44AD with respect to business. I'm carrying on a particular business, and if that business is within that particular limit of turnover within 2 crores kind of thing, then 44AD is applicable for that particular business. I might be doing something else also, but with respect to that business, 44AD should be applicable. This is what is the generalized understanding. But again, with respect to this whole applicability part of 44 AD, that subsection 6, that negative list, that disqualification is something very, very important. Okay, and what that subsection 6 tells us, that the provision of the section, notwithstanding anything contained in foregoing provisions, shall not apply to a person carrying on the profession as referred to in section 44AA1. So what subsection 6 is prescribing, that the provision would not be applicable to the person. I have mentioned this thing earlier also. This disqualification of subsection 6, they are with respect to an assessee. They are qua assessee, not qua business. So we are not talking about the business. We are not looking at business when we are trying to understand subsection 6 of 44 AD. We are looking at the person. We are looking at the assessee. And then subclause 1 says, the moment person is carrying on the profession covered under section 44AA, he would be thrown out for the purpose of applicability of 44 AD. So first case, if an assessee is carrying on a business as well as a profession, and that profession happens to be a profession covered under section 44AA1, then 44 AD doors are closed for that particular person, or for that assessee. 44 AD provisions are clearly not applicable. We may try to argue some business is separate, profession is separate, so what difference it will make if some person is carrying on that profession also. I can very well apply 44 AD with respect to that business. Mathematically you can apply, intuitively you can apply, but as per the requirement of law, because of that disqualification contained in 6.1, you are not entitled for 44 AD with respect to your business. But now coming to another aspect, the same person is carrying on profession, where profession is also within that 50 lakhs turnover limit, gross receipt limit. Whether for profession I can at least go for 44 ADA, the answer would be yes. Because in 44 ADA we do not have any corresponding restriction, which is there in 44 AD6. That corresponding restriction is not there under section 44 ADA. So even if I'm carrying on a business, for business I cannot go for 44 AD, but for my profession I can definitely go for 44 ADA, the applicability part of this. Okay. Okay. My very sincere advice to all the professionals would be is to have a very proper appreciation of that 44 AD subsection 6. that is what I feel, that is quite a sort of neglected area of provision under section 44 AD, but it is there and having a very equal force of law. So no amount of interpretation would change that particular situation, something which has been clearly denied. So that cannot be made possible by any interpretation. 44 AD 6.1 very clearly says that a person carrying on a profession not eligible for 44 AD. So even if my business is complying with those conditions for 44 AD, still as an assessee I would be debarred for 44 AD if I'm carrying on that profession covered under section 44AA. Okay. So first point. Now come to another issue which arises out of this whole mass of 44 AD, ADA, and probably we have got few questions already based on this particular aspect. Now the point is this, and I must mention this is an area where there is a great amount of debate happening, and then various websites, various kind of generalized advice we get, and that is on a very incorrect interpretation of law. So we will try to understand that situation. Now the point is this, that 44 AD subsection 6, what we have discussed just now, it says that if a person is carrying on a profession referred to in 44AA1, that is specified profession, then AD would not be applicable. Okay. ADA applies only on persons, only with respect to a specified profession. So the point is this: if a person is carrying on a profession other than a specified profession, whether he can apply 44AD in that particular case. I think we have already got a query on this. Yeah. Chintan Malkanji is asking, freelancer photographer would be covered under section 44AD or 44ADA. Chintanji, I think this discussion will be having a direct relevance with the query which you are asking. So freelance photographer is a very good say example we can take for the benefit of all the audience. A freelance photographer, whether I can apply 44ADA or I can apply 44AD in case of a freelance photographer. I'm sure we will be able to find out example of lot many similar kind of say activities which are very clearly not covered in 44ADA. Because as I have mentioned, 44ADA does not apply to all sorts of profession. 44AD says any business. ADA does not say any profession. It says a specified kind of profession. So again, for the sake of example, freelance photographer is not a specified profession. So very clearly 44ADA is not applicable. So whether it means that something which is not covered for 44ADA, automatically it is covered for 44AD. Whether these two sections are mutually exclusive kind of section, either it is covered in 44AD or it is covered in 44ADA. Or say from a different perspective, whether 44AD can be interpreted to mean that it will cover every activity which is not covered in 44ADA, because 44ADA covers only handful of professions: legal, engineering, medical, accountancy, company secretary, something like this. Now whether all other activities, simply because they are not covered under 44ADA, whether they will get covered in 44AD. So freelance photographer, whether it would be covered in 44AD or ADA, ADA is very clearly not applicable because it is not in the list of specified profession. The moment it is not covered in ADA, whether automatically it comes in AD. Okay. The point I think we all would like to see here, that section 44AD very specifically says that it is applicable with respect to any business. So in order to be covered in 44AD, the very first, very basic, very minimum requirement is this, that whatever activity I'm talking about, that activity has to be a business. And business is different from profession. We all know that there are a number of say judicial decisions on this particular point. Business is something different, profession is something different. So any activity which is a profession may not be a specified profession, but still it is a profession, not a business. Whether it will be covered for the purpose of section 44AD, simply because 44AD is not applicable there, in my humble opinion, no. The very basic requirement is this, that it should be a business. Any activity which we are trying to cover for the purpose of section 44AD, it should address to the quality of being a business. If it is a profession, not a business, then 44AD will not be applicable. It may not get covered in 44ADA also because it is not a specified profession. So probably law is creating three categories of activity. One category, one box is all types of business. Second box is profession specified under section 44AA, and third box is all other professions. Any activity which gets covered in that third box, all other profession, this activity neither 44AD nor 44ADA. Though again, I must generate a caution here on say all these different kind of websites. You will find a lot many persons answering the question in a different manner, and they will try to cover everything which is not covered for 44 ADA. They will try to cover all such activities into 44 AD. But in my humble opinion, the word business sitting there in section 44 AD is of very important significance. Any activity which cannot be treated as a business, that cannot be covered for the purpose of section 44 AD. It may not get covered under section 44 ADA because this is not a specified profession, but it does not mean that it will get covered automatically for the purpose of section 44 AD, unless and until there is something which can be answered as a business. This 44 AD will not be applicable in that particular case. Okay. Now, in that whole discussion, another very interesting aspect is this whole ITR filing schema. The ITR filing schema created by CPC. Now, we all are say familiar to this particular proposition that there is one kind of law mentioned in Income Tax Act, and probably there is a different kind of law which is understood by the CPC. So now CPC has given a list of codes, and these codes cover number of say different types of activities. Some of these activities may have feature of profession also. So CPC might be allowing certain activities as which are actually a profession, but CPC might be allowing these activities as part of section 44 AD. But that is what is the procedural situation. The legal proposition, because the word business has been used in 44 AD, so only those activities which address to the nature of business, they will be covered for the purpose of section 44 AD. But then, because see, majority of our members would like, and see, we all would like to ensure that first requirement is this, that my return get processed at the CPC level. I don't want to have any hassles, any panga with the CPC processing. I don't want that 143 one intimation and saying that no, this is what has been done and income has been added. So probably a practical solution of this whole discussion would be what all activities would be covered for the purpose of section 44 AD. A very practical solution would be that list of codes given by CPC with respect to that ITR 4, all those codes, whatever activities mentioned in those codes, those activities can be for the purpose of filing of return can be treated as eligible for section 44 AD. If an argument, a legal argument is relevant in certain cases, matter goes to appeal or some judicial forum, then probably this whole meaning of that business versus profession would be important. But a practical solution, this is what is the CPC creation. The list of codes they have given, and if any activity gets covered in that particular code and then you treat it as a 44 AD activity, there will not be any problem. Return will get processed at the CPC level. There will not be any practical problem in that particular case. So legal situation versus practical situation. The legal situation is very clear that 44 AD applies only on business. So anything which cannot be treated as business, 44 AD will not be applicable. Again, talking from a practical perspective, under which section my TDS is getting deducted. If my TDS is getting deducted under section 194J, and for that activity, if I try to apply 44 AD, again CPC processing will create a problem for me, because for them, anything which is 194J, 44 AD is not applicable in that particular case. So these all are say practical considerations. A legal situation is something very clear. Something which is a business, then that activity only is covered for the purpose of section 44 AD. Okay. Now coming to another issue, again related with this applicability part itself. Now this is a case where the person is engaged in a business having income lower than 8% of total turnover. Okay, I think we are already generating a good amount of discussion on this question box related with this whole business versus profession. I think we will take up all these issues once this whole discussion is over. Then probably I can try to address some of these say queries raised in the chat box again. Okay, but before this, again, let's take this particular aspect of applicability. Now, this is a case a person is engaged in a business, income is less than 8% of total turnover. He has also got a brokerage from one single transaction, not carrying on any regular brokerage or agency business, but still got a brokerage from one single transaction. Whether he can go for 44AD, and if he is not going for 44AD, whether audit would be applicable in this case. My turnover is within the limit of 44AD. Profits are less than 6%, 8%. Profits are less than prescribed percentage. At the same time, I'm having one single transaction, only one transaction in the year where I have earned some income by way of brokerage, and I have got perfect documentation to prove that brokerage income. Probably there is a TDS under section 194H with respect to brokerage, or there is an actual brokerage income. Whether 44AD would be applicable for me, and if I don't go for 44AD, whether the audit would be applicable. Okay. Again, the answer lies in that disqualification list. 44AD subsection 6. The provisions of this section, notwithstanding anything else contained in the foregoing provision, shall not apply to a person carrying on a specified profession, a person earning income in the nature of commission or brokerage, a person carrying on any agency business. So clause 3 is talking about person carrying on any agency business. Clause 2 is talking about any person earning income in the nature of commission or brokerage. The moment you have an income in the nature of commission or brokerage, you are thrown out from the applicability of section 44AD. So it might be a regular flow of income in the nature of commission or brokerage, or it might be a single transaction earning income by way of commission or brokerage. And in all such cases, 44AD is not applicable. Okay, any person having commission income is perforce out of the purview of section 44AD. Okay. I've seen certain cases where persons are having LIC commission along with carrying on the business, and then they try to cover themselves under section 44AD. Clearly not applicable. LIC commission or any other kind of commission, though your business might be answering to that criteria, your business might be having turnover less than 2 crores of rupees, but the moment you are having any income by way of commission or brokerage, 44AD is not for you. And in that case, because 44AD is not at all applicable, even the audit requirement of 44AD, audit requirement related with 44AD, that will also not be there. Then audit, if at all, would be applicable. That will be the normal audit provision, turnover more than 1 crore of rupees, that 5% income receipt in cash criteria. All this would be relevant in this case. So probably some of you might be able to see a very important tax planning idea or some kind of hint hidden into this whole discussion. There is this assessee, business is there, turnover is less than 2 crores, profit is less than 8%. Do I need to mandatorily do an audit of that particular assessee? If that person is having any brokerage income, the audit requirement will also not be there, because 44AD is not at all applicable in that particular case. Again, by virtue of 44AD subsection 6, the person is no more an eligible assessee. The person is no more entitled for 44AD provisions. So even audit would also not be necessary in that particular case. Okay. Fine. Now, probably another question, whether assessee engaged in derivative transactions, speculative business can opt for section 44AD. The cliched kind of question, most oftenly asked kind of query, whether assessee engaged in derivative transactions, speculative business can opt for section 44AD. Okay, again, my plain, simple, but legal reply, what the section conveys to me would be, why not? Whether an assessee engaged in derivative transactions, speculative business can opt for section 44AD. My answer would be, why not? There is no reason to argue. There is no reason based on which we can argue that these assessees are not covered by section 44AD. No basis of creating this particular argument. 44AD, plain and simple, you are an eligible assessee. The business, you are carrying on a business, you are carrying on any business. So this is a business you are carrying on. The turnover of this business is less than 2 crores of rupees. You are not getting covered by any of the disqualification contained in subsection 6. So 44AD is applicable. The business might be an F&O business, might be derivative transactions, might be any other business. 44AD is very simply talking about any business. There is no exclusion specifically with respect to any particular business. The only ground of arguing non-applicability of 44AD would be that whatever transactions I am doing, they do not amount to a business at all. This is not the regular kind of activity I am doing. This is a casual kind of activity, one-off kind of activity. But still, in that particular case, I always have this possibility that as per law, even a single transaction adventure in the nature of trade can also be treated as a business. So, but in any case, if at all there is a possibility of arguing that 44AD is not applicable, is to argue that these transactions do not constitute a business. If these transactions constitute a business, very strictly speaking, 44AD is applicable. There is no reason at all, no exclusion, no specific exemption. Nothing is there in any part of the act which says that F&O transactions, speculative transactions, derivative transactions are not covered for the purpose of section 44AD. At least I failed to find out any specific exemption, any specific exclusion. Okay. So immediately we have got a query, Rajesh Punjani ji, F&O turnover rupees 14 lakhs, but there is loss of rupees 1.5 lakhs, whether tax audit would be applicable. Okay, Rajesh ji, if we accept this particular proposition that 44AD is applicable even for F&O business, then all the consequences would follow in the natural manner. Okay, if the income is less than 8%, 6%, because F&O transactions, all transactions are through check only, through banking channel only. So 6% would be, say, right rate of profit. So if my profits are less than 6%, then audit would be applicable, subject to that particular condition that my total income is more than that exemption limit. So if all these criteria are there, the audit would be applicable in that particular case. Okay, so this is with respect to that F&O kind of transaction. Again, I'm repeating my proposition. There is no specific exemption. There is no rule available, no provision available, which helps me to say that derivative business is not covered under section 44AD. Whatever transactions assessee is doing, if they answer to the description of being a business, it's a business, then 44AD is applicable in that particular case. Okay. So this is all about applicability, when these provisions are applicable, when these provisions are not applicable. Now assuming these provisions are applicable in my case, there are certain queries still there with respect to that applicability part. I can take those queries after this whole discussion is over. But before this, now let's move to the next part of our discussion. Assuming these provisions are applicable, then how they interplay with other sections, how they interact with other provisions. Once 44 AD, ADA, AE applies, then what will be the position of all various other provisions of the Income Tax Act? So let's try to generate certain discussion on this particular aspect also. Interplay of these three presumptive taxation provisions with other sections. Okay. The very first question we would like to take here, and that is again an oft repeated kind of question. So what will happen with respect to the GST? Whether GST is part of my turnover for the purpose of 44 AD or not, whether even for 44 ADA also, whether that limit itself 2 crore 50 lakhs is to be said inclusive of GST, exclusive of GST, and if I'm covered by these provisions, whether that 6%, 8%, 50% of GST is also to be offered as an income. Okay. First of all, the proposition itself that I have to treat 6% of my GST, and with respect to 44 ADA, 50% of my GST I have to treat as my business income, professional income. The proposition itself is an absurd kind of proposition. Okay, no way somebody can say that whatever GST you have collected, 50% of that GST is also your taxable business income. Okay. But that is more an intuitive kind of answer. Let's try to find out answer within the four corners of law. Based on language of law itself, what kind of answer we can derive for this particular question, whether turnover would include GST or not. Now, this whole issue of GST getting into my turnover for taxation purposes comes only because of 145A. My accounting proposition is very, very clear. The exclusive method is to be followed. Why we talk about that GST at all for income tax? That is because of this nasty provision, what I can say, 145A. What this proposition of 145A is there? First thing I observe when I read 145A, I see the heading of the section which says method of accounting in certain cases. So 145A is actually talking about method of accounting. Then it says, the clause second, the valuation of purchase and sale of goods or services and the inventory shall be adjusted to include the amount of any tax, duty, cess or fees actually paid or incurred by the assessee to bring the goods or services to the place of its location and condition as on the date of valuation. I must mention here, 145A is a provision of pre-GST era, and no amendment has been done post-GST. And there's a very vital piece of, say, point in order to arrive at the correct conclusion whether GST would be a part of turnover or not. The whole issue is arising because of 145A only. 145A is a pre-GST era provision, not amended post-GST. So keeping these aspects in mind, let's try to do our own analysis. The Income Tax Act does not define turnover. CGST, we all know, they have to define turnover is their main bread and butter for GST purposes. So they define turnover and very clearly they say that it will exclude all these taxes. So this is one point. Another is this, that this whole 145A. Now 145A, very important point we need to observe, that it does not specifically refer to GST. There is no word called GST used in 145A anywhere. Okay, so there is no specific mention of GST there. It talks about a tax which has been paid or incurred by the assessee to bring the goods or services to the place of its location and condition as on the date of valuation. Mind you, this 145A is a pre-GST era provision. Okay, so the kind of tax they are talking here. Now try to see whether GST fits into this particular description, whether it is a tax paid or incurred to bring the goods or services to the place of its location on condition on the date of valuation, that is on the date of sale. probably the tax they are talking here is excise duty, the tax which is a pre-sale tax which has been paid or incurred to bring the goods or services to the place of its location or condition as on the date of valuation, that is the date of sale. We all see GST is a post sale. It is not a tax which is levied before supply. It is levied on the point of supply. Okay, the moment supply happens, the liability of GST is there. What 145A is talking about, that any tax which has been paid to bring the goods to their position as on the date of sale, or whatever tax has been paid to bring the goods to that particular position, that description is probably fitting with respect to excise duty, which is no more there. GST is not a kind of tax which has been incurred for bringing the goods or services to the place of its location or condition. So very clearly 145A is not talking about GST. So for all these purposes of 44AD, ADA, whether GST would be included as a part of turnover, my answer is very clearly simply no. And then one more aspect to that whole discussion, as I mentioned, 145A is the provision with respect to method of accounting. For 44AD ADA, there is no accounting involved at all. So there is no question of applicability of a provision which applies with respect to for the purpose of accounting. And then what 145A says, it is for the valuation of purchase and sale of goods or services, end of inventory. For 44AD ADA, I am neither valuing my purchase nor I am valuing my inventory. So 145A cannot be applied in a half-hearted, in a disjointed manner. It cannot be applied only with respect to the one particular part of it. If it has to be applied, it has to be applied for all the activities, purchase and sale and inventory. In any case, this is with respect to method of accounting. 44AD ADA, there is no accounting involved. And then the kind of tax they are talking about, GST does not fit into that particular description. This is not a tax which has been say incurred for bringing the goods to the place of sale, place and condition of sale. GST is not that kind of tax. So in my opinion, the answer is very clear. GST is not at all a part of my turnover for the purpose of this whole section 44AD, ADA, etc. Okay, fine. So after say answering this very important question of this turnover, after answering this question to the best of my understanding, now let's move to certain other aspects, applicability of other provisions. We are trying to understand interplay of say presumptive taxation provisions with other sections. When these presumptive taxation provisions applies, now what will be the position about allowance and disallowance contained in other sections of the act? Okay, so adjustment of carry forward loss, whether I can adjust my carry forward loss against my 44AD ADA income, the answer is very clearly yes. Okay, adjustment of carry forward loss is by virtue of section 72, no restriction on adjustment of carry forward losses. Okay, set off of current year loss of other hits, for example, I am having a house property loss, very clearly that is allowed, no restriction. Partners remuneration and interest, if it's a partnership firm, whether interest and remuneration paid to the partner can be claimed as a separate deduction. 2-3 years back I was entitled to claim that deduction separately, not possible right now. ADA it is not possible. 44AE still allows, if it's a partnership firm, income declared as per 44AE, then remuneration interest paid to the partners, that can be claimed as a deduction for 44AE, but not for 44AD ADA. Okay, Whether TDS non-compliance disallowance, whether TDS at all would be applicable or not, that we will see separately. But if in case TDS is applicable and there is a non-compliance of that TDS, whether 40A IA disallowance can be done, the answer is very clearly no. Section says all deductions under section 30 to 38 shall be deemed to have been allowed. 40A IA does not give me any separate deduction. They disallow whatever has been allowed earlier. So since all deductions have already been allowed, no further disallowance is possible. 40A3, more than 10,000 cash payment, again that disallowance is also not applicable. There are various rulings in support of this proposition. Tribunals have come out very clearly that the disallowance provision will not be applicable. This presumptive taxation provision, they have a non-obstantiating clause. They override all these disallowance provisions. A very interesting question is with respect to carry forward unabsorbed depreciation. Carry forward loss deduction would be available, but I am having an unabsorbed depreciation being carried forward for 44AD purpose. This is the first year I am going for 44AD. Earlier years I was having certain unabsorbed depreciation being carried forward. Okay. The situation is this, that there is a carry forward loss which is allowed as a deduction. But for the purpose of this unabsorbed depreciation, the proposition is this: law says that whatever is the unabsorbed depreciation I am carrying forward, that will be treated as a part of my current year depreciation. The exact mechanism of the law is this, that unabsorbed depreciation I am carrying forward, that will be treated as part of my current year depreciation, and that is allowed as a deduction under section 32. Normally unabsorbed depreciation is allowed as a deduction under section 32. For presumptive taxation, because 30 to 38 deductions are not being allowed separately, so carried forward unabsorbed depreciation I cannot claim as a separate deduction. Carried forward loss I can claim as a deduction, that is possible, but unabsorbed depreciation being carried forward, if I want to claim that also as an adjustment against my 44AD profits, not possible, because 32 is the section which is allowing me a deduction of unabsorbed depreciation, and that 32 is already taken care of. No separate deduction is available with respect to that under any of section 30 to 38. So unabsorbed depreciation deduction cannot be claimed. Okay. A very interesting proposition is this 43B overriding 44AD. Whether my 43B provisions, all these taxes and duties and PF and ESICs, and then whether they have been not paid till the filing of ITR, whether that disallowance would be there. Now the point is this: 44AD starts with a non-obstantive clause, same as with 44AD, and notwithstanding anything to the contrary contained in section 28 to 43C. Any deduction allowable under section 30 to 38 shall be deemed to have been fully allowed. Subsection 1 of 44AD says that this will have an overriding effect. The problem is this: 43B is also having an overriding effect. Non-obstantive clause is there in 43B also, notwithstanding anything contained in any other provision of this act. So 44AD says all deductions would be treated as already fully allowed. 43B again is having an overriding effect over all other provisions. So that means since 44AD, all these 30 to 38 deductions have already been allowed. So any bank interest would have been allowed as a deduction under section 36 while calculating my 44AD income. Now the same bank interest remains unpaid till the date of filing of ITR. Whether 43B would be applicable in that particular case. I would like to answer the question in a negative. 43B will not have any applicability when 44AD applies. I would like to argue that particular proposition based on the argument that 43B, whether it applies to deemed deductions also. Under section 44 AD, ADA, I am not getting any actual deduction. They all will be deemed to have been allowed. So whether 43B can disallow only the actual deduction or it can disallow a deemed deduction also. Okay. And then in 43B, the word which has been used, irrespective of the previous year in which liability to pay such sum was incurred by the assessee according to the method of accounting. 43B is referring to the method of accounting. For the purpose of 44 AD, ADA, there is no method of accounting which has got any relevance. So it can be argued that 43B is basically referring to those cases where method of accounting has a relevance. For 44 AD, ADA, there is no method of accounting which has got any sort of relevance. So 44 AD, ADA would not get hit by this 43B. A very interesting proposition is this, that there is this income tax department internal document, their training material based on which they train their own staff. And the training material very clearly says that for income computed at aforesaid rate, no disallowance can be made under section 40, 40A, 43B. So income tax department internal understanding is also something like this, that 43B would not be applicable when ADA applies. But I must mention there is at least one contrary view taken by ITAT Panaji in Good Luck Kinetics case, where they have said that even if 44 ADA applies, still 43B would be applicable. Any disallowance which is there by virtue of 43B, that disallowance would be there over and above the income what has been computed under section 44 AD. So that is at least one contrary view which is there. But overall, considering the overall purpose of this particular provision, this whole simplified mechanism, in my opinion, there are good chances to argue that 43B is also not applicable when 44 AD, ADA has been applied. Okay. Another aspect of this whole interplay of other sections with respect to 44 AD, ADA, now coming to 43 CA. Real estate business. First of all, again, real estate business are also covered for 44 AD. There is no exclusion with respect to real estate business also. So for the purpose of this whole real estate business, what will be that 43 CA relevance, that calculation of my sale price, fair market value, stamp duty, whichever is higher. Because 44 AD says, notwithstanding anything contained in section 28 to 43 C, that non-obstanted clause in 44 AD is stopping just short of that 43 CA. It is stopping till 43 C. It is overriding all the provisions contained in 28 to 43 C. It is not very specifically overriding 43 CA. So whether 43 CA overrides section 44 AD. My answer to this proposition again would be, there is in fact no conflict between 44 AD and 43 CA. 43 CA in fact complements 44 AD. The turnover which I need to calculate for the purpose of 44 AD, that turnover would be determined keeping in mind provisions of section 43 CA. So if a property has been sold off for 50 lakhs of rupees, the guideline value of that property would be 70 lakhs. So for the purpose of section 44 AD, the turnover would be taken at 70 lakhs and 8% or 6% of that turnover would be the taxable income for 44 AD purposes. So as such, 43C operates in a different area. It quantifies only what is my turnover. It talks about only the sale consideration, the sale price of that immovable property. So for the purpose of 44 AD, that turnover needs to be determined, and that has to be determined keeping in mind the provisions of section 43CA. Okay. Some last issues from my side with respect to all these interplay of other sections with respect to presumptive taxation. Some last few 2 or 3 more points from my side, and then we will try to answer some of those questions which have been raised, which are being raised continuously in the chat box. Okay. TDS provisions. We all know this thing that earlier the TDS provisions used to be linked with the tax audit limit. Now, because tax audit limits have gone number of changes, 2 crore, 10 crore, and all these different issues are there. Now, tax audit TDS limits have been delinked with the tax audit provisions. Now, TDS provision very simply says that if the turnover is more than a crore of rupees in case of business, more than 50 lakhs of rupees in case of profession, all these 194A, C, H, I, J, all these provisions would be applicable. So particularly with respect to 44 AD, if last year turnover was, say for example 1.5 crore, assessee has gone for this 44 AD, still in the next year TDS provision would be applicable. But as we have discussed earlier, next year TDS provisions are applicable. Next year also he is in 44 AD. If it doesn't comply with the TDS provision, there will not be any disallowance. Though penalty for non-TDS, all those issues might be there, but disallowance would not be there. If somebody is there in 44 AD, TDS provisions are applicable if the turnover of the last year is more than a crore of rupees. Okay. Some further advanced level issues where the 68 provisions can be applicable with respect to presumptive taxation. Assessee is going for 44 ADA, whether there may be any occasion to apply section 68 with respect to those assessees for those years where he has opted for 44 ADA. Now 68 operates to bring to tax any sum which has been found credited in the books of accounts of the assessee. The very basic requirement of 68 applicability is this: sum found credited in the books of accounts of the assessee. So tribunals have mentioned very categorically that assessee is not obliged to maintain any books of accounts, and that's why section 68 cannot be applied with respect to that particular assessee. There are no books of accounts, so there is no question of, say, having any sum found credited in the books of accounts of the assessee, which remains unexplained. So the tribunals are of very clear cut view that with respect to the section 68, this presumptive taxation provisions of section 68 are not at all applicable. Okay. One very interesting aspect: 269 AAs, 269T, 269ST. Loan taken otherwise than account pay, check, bank draft kind of thing, repayment of loan, any cash receipt more than 2 lakhs of rupees, section 269 ST, whether they are relevant for the purpose of 44 AD, ADA, AE, the answer is very clearly yes. 44 AD, ADA, AE does not save you from the applicability of this whole 269 ST, ST, etc. if there is a violation of any of these provisions. If later on it has been discovered that assessee has accepted any cash receipt more than 2 lakhs of rupees, very clearly 100% of that cash receipt would be liable for penalty. 44 AD, AE, all these are, they say that other provisions of the act will not be applicable, all other deduction etc. provisions would not be applicable, but 269 SS etc. all these provisions are still applicable even if assessee is covered for 44 AD, ADA etc. Okay. One more issue related with the company. If company is covered under section 44 AE, because 44 AE is applicable even for companies also, still MAT provisions would be applicable, though after this whole new scheme of taxation, MAT is not very much relevant for number of companies, but still there are certain companies which are still under the older scheme, and then MAT might be applicable. So if 44 AE provisions have been applied, still 115 JB MAT provisions are applicable, because MAT is applicable with respect to the book of profit of the company. Okay. Audit under section 44 ADA. I think this is the last piece of proposition from my side. 44 ADA audit. 44 ADA and then 44 AD audit, which is a little bit complicated mechanism. Okay. With respect to 44 ADA, matter is quite simple. If you are carrying on a profession, having your gross receipt up to 50 lakhs of rupees, and then declaring the profits less than 50%, and the total income exceeds the taxable limit, then audit becomes mandatory. And this is the audit under clause D of section 44AB. With respect to 44 AD, now there is a slight amount of complication. What 44 AD says that once you have gone for 44 AD, next 5 years you will be mandatorily in 44 AD itself. If any of next 5 years you take yourself out from 44 AD, you declare a lower income, then then you will be mandatorily under the audit mechanism. Once you have claimed this 44 AD, any of next 5 years you declare income less than 8%, 6%. Next 5 years you will not be allowed to again go for 44 AD, and for all these next 5 years you will be mandatorily into the tax audit requirement if your income is more than maximum exemption limit. So this is some sort of a complicated mechanism they have created. 1 + 5 years requirement. First year you are into 44 AD. Next 5 years also you have to be into 44 AD. If you go out from 44 AD, next 5 years mandatory audit would be applicable, and you would not be allowed to come back to 44 AD for next 5 years time. What is the purpose? What is the logic behind this complicated piece of legislation? I am frankly not able to have a very big clarity on this, but this is what the proposition of law. For all these next 5 years, compulsory books of accounts are required to be maintained and audit is required. The only saving is this: if my income is less than exemption limit, then the audit would not be applicable in that particular case. Okay. One last proposition, that whole criteria of that 5% receipt and payment in cash, whether it can save a 44 AD business from audit. For example, my turnover is say for example 80 lakhs of rupees, and all my receipts and payments are other than cash. It is through banking channel. 80 lakhs is the turnover, 100% banking transaction, and then I'm declaring a profit less than 6%. Whether I can say because of that 5% criteria I am meeting, and that's why the audit will not be applicable in that particular case, the answer is no. That 5% cash payment, cash receipt criteria is with respect to my normal audit, that is 44 AB clause A audit. This 44 AD audit is not with respect to clause A. It is with respect to clause E. When the audit is being done because of 44 AD, that is covered under 44 AB clause E. That 5% criteria is with respect to 44 AB clause A. So even if I'm having all my payments and receipts through banking channel, but 44 AD applies on me, my turnover is less than 2 crores of rupees, and I'm declaring profit less than 6%, the audit would be mandatory. That 5% criteria is relevant only when I'm covered under the audit as per the normal mechanism, not because of the audit is applicable under section 44 AD. That 5% criteria would not be relevant for me. Okay. So I think these are all the different kind of submissions from my side with respect to this whole presumptive taxation 44 AD, ADA, 44 AE, interplay of these provisions. The applicability part of these sections, that itself has got good amount of complications involved in it, and then the relevance, the applicability of interplay of these provisions with other sections of the income tax. This is what is an idea we have tried to generate in this whole discussion. I think within the time available, we can take certain queries which are there in the chat box. And before I start answering those queries, I again must express my sincere thanks to the organizer, to Virag and the whole team of Connect Easy for giving me this opportunity to share some of my thoughts with the say audience spreading across the country. And that has in fact benefited me by way of all these various interesting queries, interesting questions which are coming in the chat box. Let's try to answer some of these queries to the best of my capabilities. Okay. So first query I can take up is by Mr. Piyush Chande. What if first year of business and GTO gross turnover is 80 lakhs, audit applicable? Okay. My answer, Piyush, would be no. This is first year. You are not in 44 AD as of now. Once you have gone into 44 AD, then the mandatory audit would be applicable if you declare the profit less than 8%, 6%. It is very first year. You have not gone for 44 AD till now. So in the very first year, even if you declare your income less than 8%, 6%, the audit would not be applicable in this case. Okay. One more query I think I can take. Can we take presumptive taxation if turnover is 80 lakhs and declare income of 8%, even if we are filing GST return and declaring more than 8%? Okay. First of all, I don't think a GST return will have any kind of say any inclination related with the profit. How you are declaring profit in your GST returns, that is not something which is possible. But in any case, all these presumptive taxation provisions are very clear. Whatever income they are mentioning, that is the minimum prescribed income. If you are having a higher amount of income, you claim that you have earned a higher amount of income, that higher income is required to be offered for taxation purposes. Okay. Okay, I think okay, one more question is this: business turnover is 3 crores, no cash transaction, declaring below 6%. Is the tax audit applicable? The answer is very clearly no. You are not covered by 4480 because the turnover is 3 crores of rupees. At all, if the tax audit would be applicable, this will be applicable as per the normal provisions, clause A of 44 AB. And clause A has given that exemption now up to 10 crores turnover. If your transactions are through banking channel only, tax audit would not be applicable in this case. Okay, HUF as a business and the Karta being a CA, will 44 AD apply to HUF business? I'm not bringing ICI regulations into picture in this case, but 44 AD, whomsoever may be Karta, we are not concerned. If the assessee is having that particular business, assessee is an eligible assessee, business complies with that criteria of turnover, 44 AD is applicable in that particular case. Mr. Himanshu Shah. Okay, Gaurav Bansal. If the person has two types of business, one F&O and other trading. F&O turnover is 40 lakhs and loss is 1.5 lakhs. Trading turnover is 80 lakhs and profit is 5 lakhs. Whether tax audit is applicable. Okay, I'm not very quick in my mathematics, but what I can say, Gaurav, is this: that if your total income is more than exemption limit, but the profit you are declaring is less than 8%, 6%, audit would be applicable. So based on these calculations, if income is more than the exemption limit and the profits are less than 8%, 6%, audit would be applicable. Okay, I think majority of the queries we have discussed during the course of discussion itself. Nishit Shah, what will be the turnover amount in case of derivative transactions? Nishit ji, I think ICAI guidance note is there, which gives all these clarities, how to calculate that whole transaction of derivative, turnover of derivative transaction, addition of this all the positive and negative figures, plus premium received through option. So that guidance note is there, which gives us the complete clarity how this whole turnover is to be calculated. Okay, now very interesting queries. Please suggest some books for good knowledge on taxation. Okay, Pavan Tejaji. Okay, please suggest some books for good knowledge on taxation. Okay, I think this is what is the discussion amongst the professionals. But say the best book is always the BER Act, the Income Tax Act 1961. Okay. Do we have to conduct tax audit in case of loss in F&O business? Depends upon your total income. If your total income is more than exemption limit, then probably the answer is yes. Just see whether the activities can be classified as business, or you can classify them as non-business activity. That one possibility can be explored. If audit, if you want to save the assessee from audit, then probably you can think of treating this whole F&O activity as a casual activity, other sources thing. If you feel this is business, volume of transaction, frequency of transaction is so high that this is a regular business of the assessee, then the tax audit would be applicable if the total income is more than exemption limit. Okay, so I think these are all the queries. Some other queries I think I have already covered during the course of discussion. So I can probably hand over the session to the organizers now. Virag?
Yes, sir. Thank you so much for the wonderful deliberation. Sir, we already received so many requests for the presentation sharing as well, sir. So people like the wonderful session, and there are many comments all across the other platform as well, on YouTube, on LinkedIn as well. So we are very thankful to you, sir, for making this happen in this busy season, and you are traveling also from tomorrow, sir. Thank you so much, sir, for the wonderful deliberation, and making this presentation is also a speaking presentation, a wonderful interactive session, which is very rare in a webinar format, but you made it very easy, very lively by very making it interactive with all the participants who have raised their queries, sir. So thank you again. Thank you so much for wonderful session and wonderful deliberation, sir. Thank you.
Thank you.
Thank you so much, all the participants, for sparing your time in busy schedule and attending the session. Hope it will be added value in your professional life. Thank you. Thank you all. With this, we are concluding our today's session. Friends, we have many other sessions in coming days, as I already inform you in advance regarding our other session. So you can check out on our platform as well. So just want to share that screen once, and would like to show all of you. There's from here you can check our other session as well, and our initiative for books of taxation as well. At present we have a few books added on our stores, and in future we'll add more. So with this information and the advice, I would like to close this session with a vote of thanks to all the participants, and also to Manish sir for sparing their valuable time and making this a wonderful session, wonderful presentation, speaking presentation, and an interactive session. Thank you so much. Thank you.
Thank you.
Thank you all.